Guys, what's up? Welcome to JennaX. Guys, I am back from vacation. It was awesome, by the way. This is my first show since I've been back, and I am joined by a special guest today. I'm here with CJ Constantinos. I will bring him up in one moment. He is founder of the People's Reserve, and I actually met CJ while I was helping to moderate the Bitcoin Energy Summit, which was a really awesome event in Miami. So we're definitely going to talk a little bit about that. Guys, all about Fed rates, macro price action, Bitcoin, and DeFi tonight. But before I kick it all off, we're going to jump into the markets. We're going to talk about what's going down right now, where we're at. Today is Friday, May 3rd. We are sitting at 49 on the Fear and Greed Index. We have cooled down. We are starting to chill out. Now, you guys know that I normally love to talk my degen shitcoins, but we're not going to do degen hour tonight. We're going to talk about, we're going to talk about big boy things. We're going to talk about all the Bitcoins, all the DeFi, all the bigger broad scope of things that are going on. We're going to save degen hour for Sunday night. So if you want to look at those gems with me, and I know you're all in some serious gains if you got into Peasy, we're going to talk about that on Sunday. Bitcoin is sitting at 62,900 right now. It had a nice little pump today, despite it being a non-farm Friday with 3 red Fed folders today. Guys, I don't trade on those days. I don't like those red Fed folders, but had I would have made a lot of money. ETH sitting at $3,116, BNB at $586, Solana $144, XRP at 53 cents. So we are slowly moving up, guys. Doge, everything is in the green right now. We're going to talk about what we think is going to go on for the next few months. I can't wait to get CJ's take on that. And I'm going to go ahead and bring him up. Hey, CJ, how's it going?
Hi, thanks for having me. Great to be here.
Absolutely. It was awesome to get to meet you at the Bitcoin Energy Summit, and I'm super excited to have you. You had some really, really great viewpoints, and I can't wait for you to be able to share that with everybody tonight.
Yeah, well, thanks for having me, and sorry to disrupt your Degen shitcoin hour, but
Well,
I think we're going to get into some pretty valuable info tonight that will benefit everybody.
that is the goal, CJ. That is the goal, because I know you're not going to, appreciate my poon and peasy the way that I would. So anyway, CJ, could you go ahead and give everybody a little introduction, tell them who you are?
Yeah, well, hello, everybody. I'm CJK. I've been in this industry for about 10 years. Started out just like everybody else. What is this Bitcoin thing? I'm here to trade it and make money. Got into mining, learned a lot of hard lessons in the 2016 halving. I was mining through that halving. A lot of my analysis was based off of what I learned through that process. Since then, trade every once in a while, only on very specific moments. Been focused on just stacking as much Bitcoin as I possibly can. I feel like Bitcoin is the reserve asset of the entire internet economy. When Bitcoin goes up, everything turns green. When Bitcoin goes down, pretty much 99.9% of things turn red. Well, that's because Bitcoin is the base layer money. So I mainly keep my focus there, but I'm very excited for where the internet economy is going and all the growth that we're seeing in it. And that they say, when they start to fight you, what comes next, you win.
Mm-hmm. Yeah. Johnny K always says that. First they fight you, first they laugh at you, then they fight you, and then you win.
That's right.
Absolutely. Are you a little bit of a maxi? Tell me the truth.
I am a Bitcoin maxi, but I
Okay.
define Bitcoin maxi as somebody who, through their studies, has come to the conclusion that Bitcoin is money and nothing else can compete with Bitcoin. So there are projects. I own other coins because I believe those coins are not competing with Bitcoin. And there's a role that they play within the internet economy to facilitate a truly decentralized finance ecosystem where we have true free market interest rates, prices, the whole 9 yards.
CJ, how do you explain Bitcoin to someone that has never owned it, is new to it, doesn't know what it is? What do you tell them?
That is such a simple question, but it's the hardest question to answer. I think, my number one go is that I always ask, well, what do you think money is? And usually I get like the gold or the silver or some people even say dollars. They don't understand the difference between money versus currency. So it depends what their answer is. But if they answer gold and silver and they have an idea of, debt-based derivatives like dollars that are backed by debt, can't be money. They're just a currency that allow for a medium of exchange. If we can swallow that pill and move into the money portion of it, I say Bitcoin is engineered money. It's actually a discovery that was made. And it's the first, I argue, it's the first form of money that humanity's ever had. And that's why nothing up to this point has worked. Even gold and silver, we saw what happened to Rome. And now making derivatives of gold and silver with the paper currency notes that ended in 71 in the United States, and now into this complete modern monetary theory idea where I think what's going viral today is that central banker or Biden's chief economist can't even describe the process of the U.S. Treasury issuing bonds, the Fed monetizing that debt so the government can spend it back into circulation. He's like, he must say and what 100 times, and this guy's making decisions. So it's even the people in the higher ups who you think really know what's happening, they haven't taken the time to study this stuff. And once you do, you start to find out, wait a second, Bitcoin isn't like gold. Bitcoin isn't like silver. This is a completely new discovery. And that's what makes it the reserve asset of the internet and creates all these opportunities for the entire ecosystem that we all know and love.
I absolutely do agree with that. Someone on the panel made an interesting comment, and they said that Bitcoin is tokenized energy. How do you feel about that comment?
Yes, that was Daniel Diaz
Yeah,
from Citizens
yeah,
for Sound Money. He's a great
yeah.
guy, and I think he's smart, and I think he's spot on. I like to call Bitcoin commoditized energy in the form of money, which is just another way to say the same exact thing. And you can see my background that I keep. It's always electric Bitcoin because it is the proof of work that is
Right.
the real design on Bitcoin. That's what solves the double spend problem. That's what keeps the US government from taking a vote behind the rest of our backs and spending money into circulation. The proof of work, what's required to send a transaction and what's required to release those new Bitcoins within the inflation schedule. That is the real discovery. And in the spirit of your show, knowing that you guys are anti-maxi, right? We don't want to go full anti-maxi here. Well, there's an ecosystem that I'm really interested in called Stacks. And the Stacks ecosystem is a lot different than every other L1 ecosystem. I've had Ethereum since 87 cents. I heard you mention BNB on the price come up. I bought BNB for 10 cents because I needed it for lower trading fees when I was messing around on Binance. But no one knew those things. So you never bought those things to invest in them. That's just I don't know anybody in this industry was like, oh, hey, when BNB was 10 cents, I invested in it. No, when BNB was 10 cents, we were trading like idiots trying to get ahead and getting liquidated. But hey, with BNB, we saved money. So, those stop losses could be a lot tighter when your trading fees were lower. So let's buy some BNB. We didn't realize this much later, you can add a couple zeros to it. And I think that's what's going to happen in Stacks DeFi. Stacks DeFi is going to have a DeFi boom like we saw in the Ethereum L1. And that's the opportunity that I would say that your listeners should keep an eye out for, because Stacks right now, unusable. But after this Nakamoto upgrade, we're going to get the best of both worlds. We're going to get the speed of a Ethereum or a Solana or an Avalanche, take your pick. But we're also going to get the security, the transaction finality of Bitcoin. So Bitcoin with this L2, which is created under a proof of transfer algorithm. I mentioned Bitcoin's proof of work algorithm being the real important discovery. Well, proof of transfer is that next algorithm. So, a lot of your followers probably look at coins that have different types of algorithms, like proof of stake. They have DAG networks. There's a whole bunch of different strategies to offer the services that they offer. But ultimately, I believe this market will consolidate into proof of work, which is Bitcoin, and then proof of transfer, which is a derivative. It makes Stacks a derivative of Bitcoin. When the Bitcoin price goes up, the price of Stacks will go up. When the Bitcoin price goes down, the price of Stacks will go down. Not because it's correlated, but because there's only 4 ways to buy Bitcoin in the world. So this is really cool, because think about the coins that you invest in. If this is true, there's only 4 ways to buy Bitcoin. You can labor for it.
Okay.
You can mine it. You can market buy it, or you could stack stacks. Because when you stack stacks, which is just like, it's not like staking. It's called stacking for a reason, because there's a little bit different within the consensus, but you earn Bitcoin, right? So as the price of Bitcoin goes up, the price I'm willing to pay for my stacks goes up, because when I stack my stacks, I earn more Bitcoin, and vice versa. When the price of Bitcoin goes down, the less I want to pay for that stacks. So I think and there's Alex Labs right there. That would be like the
This is the
Uniswap.
correct, right? This is
Yeah,
the
that's
correct
stacks.
stacks.
That's
Okay,
right.
cool.
Alex, you see Alex right there? That first
Oh, I just lost
yeah.
it. Hang
Yeah,
on.
if you go back. I think
Yeah,
this is the
Alex.
Uniswap. So when you think Ethereum, you think Uniswap.
Okay.
Uniswap was groundbreaking technology, right? So we have automated market makers that we know and love all throughout a bunch of different ecosystems. And think of all the decentralized exchanges there are now. Well, Uniswap carried that torch. Well, what's the Uniswap of stacks? That's Alex Go, which was somewhere up on there. I've seen it on the screen. But Alex Labs, right there, I could see it right there. Yeah, Alex, that is the first. That is like the Uniswap of stacks. So what I'm really trying to say here is that if you miss the opportunity of that summer DeFi on Ethereum, where there was one case scenario where I bought Lend at 30 cents. Well, Lend turned into Aave. And this is one of those things where it was just like, we're just
Oh,
playing around with the protocols. You know,
yeah,
we didn't know it was going to go 10,000x. We were just
yeah.
staking and seeing how these things work. I wish I knew, because I put in a lot more money than I did. So this time around, I think we're going to see that same opportunity in the Stacks ecosystem. And I really think people should pay attention there, because I think it's the largest opportunity of the entire halving cycle.
All right, so I'm gonna pull up right now too, just because I want to pull this up on CoinMarketCap and look at Stacks. Stacks is behind, like, correct me if I'm wrong, but Miami Coin, the different city coins and things like that. Is that the
Yeah,
same Stacks?
City Coins is built on Stacks. Yes.
I thought so.
Yeah.
Okay. So just to kind of put this into perspective, guys, just to take a really quick look at Stacks, the current market cap is 3.2 billion. The total supply, we have 1.8 billion, and circulating supply 1.45 billion. Okay. So honestly, this could have a lot of room to grow. So we're bullish on Stacks, is what we're
Yeah.
saying.
You can
Guys, this
see
is not
during
financial advice.
the crypto bear market there, during the bloodbath of the
Wow.
collapses and everything, price went down very far. It went on
Wow.
some exchanges, it was sub 20 cents. So
Wow.
a lot of that fear and uncertainty and doubt, you know how, I mean, your listeners know that the volatility of the altcoins is just tremendous. It's more than that of Bitcoin, which is already
Mhm.
one of the greatest, most volatile assets in the world. So these price points can go up and down. Like you said, do
Mhm.
your own research. But my thesis is, and I've been telling my followers all the way back since 70 cents down to that 20 cents, and now all the way up to the new all time that was recently put in. I
Mhm.
think that Stacks is a top 10 coin. And that's because the way that it enables Bitcoin to turn in from the digital gold, which is being institutionalized on Wall Street as digital gold. What Wall Street doesn't understand is Bitcoin is digital collateral. And your listeners will understand it better than the people on Wall Street. And maybe a couple of days ago, they'd be like, well, how can I understand it better? I don't work at a big bank. I'm not a big broker. I'm not a floor trader. Yeah, but look what just happened to the top economist. These people are no smarter than you. Put in the time and energy, and you will be successful. And I believe the Stacks ecosystem, with a DeFi explosion later this year after the Nakamoto upgrade goes live, is going to be the best opportunity of the cycle.
You are bullish on Stacks like I am bullish on Base. I'm definitely going to be checking this out. Now, do you have, because you mentioned Uniswap, do you have concerns about regulations? Because we see the SEC, the CFTC, the DOJ, they are cracking down on DeFi across the board. They're saying even non-custodial wallets, they're money transmitters, all of these things. What are your thoughts on that?
Yeah, fantastic questions. And again, this is not legal or financial advice, but in my
Sure.
opinion, when I look at this, what I see is that when the hammer starts to come down, the green light is getting close. So you think Larry Fink would have launched $100 million tokenized fund on Ethereum if he thought the hammer was going to come down, or if any one of his lawyers or team of lawyers or accountants thought that the hammer was going to come down? I just think that, look what happened with the Bitcoin ETF. As soon as Larry and BlackRock got involved, this thing got through. After years and years and years of people who didn't have that kind of network and connections were trying to do the same thing. Once he got involved, everything went through. Well, now he's getting involved in Ethereum and he's launching funds on Ethereum. So
you fade ETH right now.
for me, for me to say that that it's not going to work out would be for me to disagree with BlackRock's legal team. And
Right.
I think that, either Larry's getting ripped off or BlackRock's legal team knows what they're doing. And I, as much as Bitcoin maxis don't want to see it happen, and I think the argument is there, if the charges were made within the statute of limitations, Ether's so old now that it's just like, if you were going to do it, you should have did it within the first, I think, 7 years. But we're beyond that at this point. So it's a really hard argument. And then it started out proof of work like Bitcoin. Now it's proof of stake. So there's that extra element in there, which shows decentralization. No one entity made that decision. The people had to come together. I just don't see it happening. So I do think people should be concerned. You should always keep your eye out, and that you should do your due diligence. And look what happened to Samurai. These things are going to happen when you're taking on the largest market in the world, which is the money market, a multi-$100 trillion market. The people who are in control of that market and profit the most are going to defend their position as much as they can. And people like Larry and all the other ETF providers, they make money by offering those products. They make money by offering the Bitcoin ETF, by offering the Ethereum ETF. And they offer those products because eventually the demand overwhelms their ability to hold out. We saw that the ETF managers for who was it, Morgan Stanley, and there was one, they both stepped down. Basically what happened is they stepped into the office and said, you guys blew it on this one. You didn't embrace the Bitcoin ETF. We've lost out on millions of dollars of sustainable profit from just managing Bitcoin in a custody account. You guys are fools because you chose your own principles over the reality of the marketplace's demand. So I think there is enough demand for Ethereum. I think there's enough demand for DeFi that all of this regulation is going to work out. And ultimately, at the conclusion of the regulation, just like with Bitcoin, at the conclusion of all this, you get the green light. So regulation is like, it might be bad for prices temporarily, but what comes at the end of it is, hey, that door gets sealed. It's not going to be opened up again. We can move on to the next thing, and you get the green light. And that's when this market is really going to start to run.
Right. And I hear what you're saying. Definitely. It's just, I feel like that's why you have to, and everybody watching, you have to be, convicted in what you are investing in, do your research definitely, and what you feel is going to be here for a long time, and who is trying to be a good actor and do things by the book. But honestly, right now, it feels like that doesn't even really matter, because you have like the SEC that's just, ruling by enforcement. They're just doing whatever they want to. They're complete bullies. Part of me thinks that, maybe this is all just a show. Maybe there are, behind the scenes, because I'm not saying that anyone, any officials or anyone shady or anything like that, or any public servants are shady, would never say that. But maybe there are chosen ones already, and maybe you have to fight the battle to win the war. So it's kind of interesting. I mean, I've heard many different takes where, like Brad Garlinghouse, CEO of Ripple, has mentioned that 99% of cryptos will fail and will go to zero. I believe that in time eventually. I think, though, the thing is, there's always going to be different platforms that allow you to launch a token, and people are always going to find a way. I do believe that. And I think we might get to the point where it's almost like stocks on, like penny stocks. Do you know what I mean? It's just weird, but I really hate to see them continue to drive innovation out of the US. It's pretty sad, honestly.
Yeah, well said. I mean, it is, because we should be the innovation hub. We should be the tech hub, and we should figure out ways to make these things work. I'm at People's Reserve, and we're in the United States. And I do have to say, there are the proper rules and regulations. It just takes a lot of extra time, money, and effort. And it's just so much easier to go offshore. But if you have a good legal team and you have a good plan, and you make sure you do your due diligence, you can get the work done. The problem is you get the work done for 5 times the amount of cost and 3 times the amount of length of time. that you can get it done somewhere else. And crypto is such a fast-paced marketplace that, you know, the teams choose to go other places. For us at People's Reserve, though, it made sense to go through that process and to take those extra steps and take our extra time, because we're a US based customer, a US based company, and our customers will be US based. So we wanted to do it the right way. And not to say that offshore is the wrong way, but sometimes things make sense, sometimes they don't make sense, depending on your business model. For us, it made sense to stay here in the United States, pay the extra money, take the extra time, and like you said, you fight that little battle, but in the end, it costs a little bit, take a little bit longer, but you got the green light. And what comes to mind is that company Voyager. Voyager failed when FTX failed because of their business model, but they had a very sophisticated corporate structure. They were the only company in the world to have a publicly traded stock and a globally traded token. So they traded on the US stock exchange, had access to US capital markets, and at the same time had a globally traded token, because they took the extra time to set up their business model with their tokenomics and with their securities to make sure that it was a clear understanding of what plays what role in the business model. And they got the green light from the SEC. So there is still hope here in the United States, as much as it seems as it's just an attack. I think that it's a designed attack. They come after privacy more than anything else. But ultimately, Larry sees what's coming. There's going to be an integration of DeFi into TradFi. I saw an article the other day that the New York Stock Exchange is now having a conversation about 24-hour trading. So, you know, where did that come from?
Awesome.
Obviously,
right.
that came from crypto. Yeah, obviously
Yeah.
they're seeing like, oh my gosh, like who came up with the idea that money shuts down? Like, it's just,
it
oh,
should never. We should
yeah.
have access to it 24/7. And we want to trade. There's some of us that we're hermits and we enjoy sitting at home looking at charts.
Yeah, so I think we're going to see it. I think we're going to see that, and I think the attacks will still come, but they'll be strategic and they'll be targeted. But Larry and BlackRock and a couple of the other funds are launching their tokenized funds, and I think that's going to prevail.
Absolutely. I just want to take a second, guys. Smash that like button. If you're in here, you're hanging out, you're finding value, smash that like. Go follow CJ on X at CJ Constantinos. I have his Twitter pulled up. It's also right in the link below in the comments. Brian, what's up? We got Mark in the house. Devin, Alexandra G is here hanging out. Brian B, Steven. What's up, guys? Oh, you have some Stacks fans in here. They are totally agreeing. Huddle all the way to into the world. You know, CZ said if you can't huddle, you won't be rich. I believe that because, you know, I take profits and I'm probably not going to get rich taking profits, but I'm also not going to go broke. So I could tell you that. What's up, King Alexander? Guys, thanks for hanging out. Definitely smash that like. If you are watching us live on X right now and you want to jump into the comments or you have any questions for CJ, definitely drop them below. All right, so I'm going to pivot us a little bit. I do want to come back after we hit a little bit of Fed talk and talk about People's Reserve, because I'm definitely very interested in what you're doing with that. But the latest hot talk this week came on Wednesday, and you know what I'm talking about. The Federal Reserve, guys, just in case you don't know, just to recap, said Wednesday that it is holding interest rates at their current levels, as hotter than expected inflation data continues to push back the timing of the first rate cut. Fed officials have kept their benchmark lending rate at a 23-year high since July, after aggressively raising rates starting 2 years ago. Officials said they need to have enough confidence that inflation is under control before lowering borrowing costs. But the latest figures show there has been a lack of further progress according to their latest policy statement. Now, CJ, I know that you know all about this and you have also had some hot takes. So please, if you could, just go ahead, break this down for us. Tell us what this means now and in the future. What are we looking at?
Yeah. So I think the best way to do this is just to ask a question. And that is, hey, would you like to borrow money from me at 5%, or would you like to borrow money from me at 0%? The answer then becomes very obvious when you put yourself in those shoes, because you want to borrow at 0%, not 5%, because it's going to be more affordable for you. You can borrow more. You can afford those monthly payments with the interest rate being lower instead of higher. So the government finds itself in a very unique situation, because it has to raise interest rates in attempt to slow down the economy, to slow down the rise in prices. And they can't, because the higher they raise the interest rate to try to slow down the economy, to tamper inflation, what happens is the $34 trillion of debt that we have, 11 trillion is being rolled over in the next 2 years. That's being rolled over at a higher interest rate. So the $214 trillion of unfunded liabilities like Social Security and Medicare, Medicaid, that's got to be paid for. And what happens is we end up running like a $3+ trillion deficit, meaning that in the budget, the politicians vote to spend $3 trillion more than they collect in taxes. Well, where do they get that extra $3 trillion? Well, they borrow it from the market. But when they borrow it, they don't invest it to get a return on it. They spend it into the economy, thinking that the economy is going to produce that return on the investment through increased tax revenues. That's the whole system. That's the whole model. So they're borrowing money, they're reinvesting it in their own company because their own company is going to do good. And when my company does good, I'll be able to pay back that debt. So I don't have to worry about it, right? Trying to compare it to a personal business level to the government level. And they're stuck in that situation where, oh no, my business is not doing as good as I thought it was going to do. The revenues and the cash flows are going up slower than my bills are going up.
Yeah.
And now the bank has called me and told me, well, I can't borrow money at 0.25% anymore. I can't borrow money at 1% anymore. Now I have to borrow money at 5.25 to 5.5%. That is 200, 300, 400 times more of an interest rate cost than I was previously facing. So now my costs are going up extremely fast at a worrisome rate, and my revenues are still only slowly increasing. And that's the problem that we have today. The government cannot get the revenues to grow faster from their business, which is the economy. The economy cannot grow faster to produce the tax returns to pay for the amount of money that they're spending, that they're borrowing and spending into circulation. And what happens is when the government borrows that money and spends it into circulation, people call this printing money, but sometimes the Fed prints money. Like during COVID, there was nobody wanted to lend their money to the government. There wasn't enough money to lend. The government needed way more money than the market was willing to lend. So at that time, the US Treasury issues their treasury bills or notes or bonds and sells them directly to the Federal Reserve, who then prints dollars and gives them to the government and holds the reserves on their balance sheet, and the government spends those into circulation. So that is actually the definition of inflation. So notice how I didn't mention the economy in there, right? Because we hear all the news all the time about how inflation is doing, what inflation means for macro, but inflation is a monetary phenomenon. Inflation has to do with the increase or decrease of the amount of dollar currency units in circulation. So when the government borrows money from the marketplace, that money doesn't get deleted from your bank account. You still see that amount in your bank account. But then the government takes it and spends it into circulation, and those numbers go into other people's bank accounts, so they're spending it too. So they increase the amount of circulating currency units, whether they borrow it from the marketplace or whether the Fed prints it for them to spend into circulation. Both those are the definition of inflation. Now, what's really interesting is now that you understand the definition of inflation, you say, well, wait a second. Why is the Federal Reserve coming out and saying that they want to fight the economy? Why do they want to create demand destruction? What the heck does that have to do with fighting inflation? Because when the economy gets hot, what happens is not inflation. What happens is a change in the supply-demand equilibrium. So when the economy is hot and people are doing well and demand increases against a limited supply, and a supply that can't be expanded at an infinite rate like dollars can or like demand can. When it expands against that supply, it creates a positive price pressure. And the same vice versa. If the demand goes down against a steady supply, then what happens is the prices come down. And that's the natural free market supply demand price equilibrium, creating price pressures within the marketplace. Two totally separate different ideas. So that's like if your listeners can understand that, you are now smarter than the chief economist to the president of the United States, because he doesn't even understand that. So congratulations, and set up your resume because we're moving up, baby. This is how far behind these people are.
Wow.
But this is the reality of what's happening. So now they can't raise the rates any higher because if they raise the rates, the interest expense is going to go up. But they've already done it, Jenna, to the extent that the interest rate is now the third largest budget item for the US government. Only Social Security and healthcare cost more money per year. The interest rate is now number three. Even defense, even budgeted defense, we spend the most money. We spend 10 times more money
Oh
on
God, yeah.
defense than any other country in the world. You can combine all the other countries in the world and they still don't spend as much as we spend, but we still spend more on interest than we do on defense because of what they did with those interest rates. So they can't keep raising them because then the interest rate expense will require so much inflation that prices will go out of control. So then we say, okay, CJ, we get it. They can't raise the rates that much higher. But what happens if they lower rates? Okay, well, here's the next problem. They borrowed all this money from the marketplace. All of that money they borrowed, it's still the principal balance of your bank account. And now when they lower those interest rates and you're no longer interested in lending them your money for a lower rate, the only reason you move your money out of real estate and out of stocks and out of gold and out of Bitcoin and into dollars was to get the yield. Well, now that yield is disappearing. You're no longer incentivized to save by that yield anymore. So what are you going to do? You're going to sell the debt and you're going to run back into hard assets. You're going to run back into Bitcoin. You're going to run back into crypto, real estate, property, cash flow businesses, all of that sideline liquidity, which is upwards of $5 trillion, will come rushing back into hard assets and the prices are going to go out of control. Well, we have a problem. If we raise interest rates, prices are going to go out of control because of inflation. If we lower interest rates, prices are going to go out of control because the supply-demand equilibrium is going to change when demand goes up significantly against the fixed supply of these hard assets that we have. The Fed is trapped. There's nowhere for them to go. And what they've done is because they've unnatural stagflation, like you see in my tweet here, it's unnatural. It's when prices get high, the economy is supposed to slow down. That's a rule of thumb. So when prices go up, demand should go down.
Right.
And then what happens is when demand goes down, the prices should cool down. Prices should come back down. They should come back to that equilibrium level, but they're not coming back down. And this is why, because they keep creating inflation with these higher interest rates. So we're doing the two worst things you can possibly do: creating demand destruction on the supply-demand equilibrium and creating inflation with the currency units. So prices can, even though the economy is slowing down, this is why everybody's so confused. They've been waiting for a recession. Where's the recession? Where's my discounted prices? When can I afford to buy a home again? Well, I'm waiting, but it's not coming because they keep devaluing the currency. And the positive price pressure of inflation, which is the devaluation of the currency, that creates a greater price pressure than the negative price pressure created by the lack of demand. So we are in a recession right now. It's an inflationary recession where the economy is slowing down and prices are still going up. This is a national economic emergency called stagflation. And there's no natural way to get to stagflation. Stagflation is an unnatural occurrence that can only take place when an economy is shrinking, which means the demand is not forcing prices higher because the demand is going down. Therefore, the prices should be coming down. We're waiting for those prices to come down. But why are they not coming down? Because the currency is being devalued at a faster pace than which demand is going down. And we are stuck. And I say prepare accordingly and to protect purchasing power, because Bitcoin is the best way to protect purchasing power.
And that is exactly what I was about to ask you. Guys, give it up for CJ. He is like awesome. Seriously, a wealth of knowledge. Absolutely love that breakdown. CJ, you just answered it, because I was going to say, if you were just a normal, everyday person, middle class, just working paycheck to paycheck, trying to get by, what would you be doing to help yourself right now?
I love that question. And what you need to do is you need to understand that you need to stop working for dollars. You need to stop. Everybody needs to stop working for dollars right now, because what you do is you go to work, you earn your dollars. And when you get your paycheck, you pay your bills, right? You pay all of your bills. What you have left over is called your savings. you should allocate 100% of your savings into Bitcoin because that's the only way to save. You cannot save dollars. There is no way to save dollars. You might be able to temporarily trade your dollars in shitcoins and get ahead, but go ahead and look at all those shitcoin charts when they're measured against Bitcoin. Whenever your shitcoin is going up against Bitcoin, sell it and take your profits. Because in the long run, it always goes down against Bitcoin. That's why Bitcoin is the reserve asset of the internet economy. And one of the best sell signals, by the way, when I trade coins, when it goes up against Bitcoin, I'm selling. That's how you know. That's how you know it's overperforming. That's how you know to take profits, because something can only go up against Bitcoin for so long. Every single chart against Bitcoin goes down. So use that cheat code when you're trading to get ahead. Use that cheat code. Oh, I'm up against Bitcoin. Great time to lock in profits. I guarantee you'll do better this cycle than you did before with that little tip and trick right there. So all of that comes together and creates this scenario where you say, wait a second, this guy's a lunatic. He just said I should be 100% allocated to Bitcoin. Yes, with your savings, right? So you work for your dollars, you pay your bills, you put your savings in Bitcoin. Everything goes down against Bitcoin. Now, if you want to take a portion of your savings and trade and do whatever you want to do, then go ahead. Sure, it's fun. And sometimes you can hit big and you can do really well. It's worth the chance because people do it. If you really put your heart and soul into it and you really study and you're disciplined with your risk management, you can get a hit that changes your life.
Yes, you
also, if you're messing around in DeFi like I was, I put in a very small amount of money. At the end of it, I'm like, whoa, and I wasn't even trading. I was just messing around with the technology. So check out the Stacks DeFi when it comes out. Put a little bit in there and just leave it in there. Hold it for long. Who knows what's going to work? Nobody knows what's going to work and what's not going to work, but something's going to work. And if you happen to hold it, change your life. And that opportunity is not available everywhere else. So I think that's the mindset. I labor for my dollars, or I labor for my fiat currencies, depending where you live in the world. You labor for the paper, you spend the paper on your bills, but then your mindset is 100% Bitcoin. And then your wants and your desires and your trading, that takes away from your money allocation. That's what really takes away from your allocation. So if you can do that, Bitcoin does the hard work for you. And then you're taking a few chances out on the risk curve. And if one or two of those hits, you can get ahead even further.
And if you're an XRP lover out there too, you could put some in XRP, not financial advice. I know it's the worst performing asset right now, but hey, I think when clarity comes into place, I think, a lot of these other ones go away. I think it will have its day when it does what it's supposed to do. But I'm right there with you. I think it's a really smart idea. I look at the chart. You wouldn't have all these major players in the game. And, Daniel Held, he brings up a good point here. He says, I wish I could buy milk with Bitcoin at the store, but here's the thing, and this is my thought, CJ. I look at Bitcoin as a store of value, not necessarily to transact with Bitcoin. I feel like I hope one day I can transact with XRP or XLM, like something that's made for transactions. What are your thoughts about actually transacting with Bitcoin? Do you think that that'll be a normal everyday thing, or think more of a store of value?
Well, the first thing is that the store of value market is a 400 trillion, maybe by the time this actually takes place, over a quadrillion size market. So we're talking about, $900 trillion plus dollar marketplace for store of value. And now when you talk about medium of exchange, that we're talking about a multi-trillion dollar marketplace. So still a very large marketplace, but two different things, store of value versus medium of exchange. And yeah, he makes a great point. Why can't I spend my Bitcoin? Well, here's the thing. Why would you sell your Microsoft shares when they're still working in the garage, right? Imagine all those guys who were working in the garage said, oh man, this is great. I own 5% of this company. Hey, you know what? I'm worth $1 million. I'm going to take my $1 million. He takes his $1 million. But when Microsoft becomes the behemoth that it is, he'd be on the Forbes top 100 list. Right. But he decided to take it. That's why you don't want to use your Bitcoin. Yes, in the long term, Bitcoin is a medium of exchange, and there's going to be layer 2 solutions like Lightning and even Stacks and Fedimints and a whole bunch of different solutions that increase the monetary velocity of Bitcoin, allow Bitcoin to change hands at a much quicker pace than what it does right now with 10-minute block times. And when you're crowded waiting 30, 40 minutes for a transaction to go through, you can't use it for that. But it's like, again, selling that stock before it becomes what we know it is. And that kind of ties into a lot of what I do on Twitter with my cost structure analysis. Bitcoin is trading at the commodity price right now. It's not trading at its monetary price. So I'll spend my Bitcoin when it's trading at its monetary price, because that's when I'm getting its real value. When I'm trading at commodity price because I'm at the bottom of the S curve of adoption, I don't want to spend my Bitcoin. I want
Right.
to save it. And also the other thing is, a lot of people say, well, how do you lend out your Bitcoin and make money? That's fiat maxi mindset. You don't lend your Bitcoin out to make money. That's why all those companies failed.
It's yours.
You borrow against your Bitcoin to make money. Bitcoin has a 60% CAGR. So now you got your 100% in savings. You know what? I want to make a trade. Here's an idea. How much is that trade going to yield? What's your chart say? 10, 15%? Borrow against your Bitcoin to make that trade. Why sell your Bitcoin? Borrow against it, make the trade. If you win or lose, you have to use your cash flow from your real world to close the liability if you lose. But if you win, you can close the liability and keep the profits. And you're all back in Bitcoin. You're building your stack. That's the real way to do it. Borrow against your Bitcoin to take those risks and let go of these fiat mindsets of, oh, I have to lend out my Bitcoin. I have to lend out my dollars. No, you have to be 100% allocated to Bitcoin. Then you have to be empowered to borrow from your Bitcoin to take your risks. And then what you do with those profits, you do. But I would put them back into Bitcoin to grow your asset side of your personal balance sheet. And that eventually will allow you to take a larger liability when you have another opportunity that comes up. These are just tips and tricks I've learned through my decade of being involved in crypto.
And I appreciate you sharing them with us. We love to learn from those who are OGs who have been around for a long time. And it seems a lot easier. I want to say a lot safer for those versus, people who, like, let's say my mom, who, she wants to be in crypto and buy all of these things, but she's not going to watch them 24/7. And a project could just like go to the shitter, excuse my language, and just like, you know what I mean? It could disappear. And for people who aren't going to watch it and they want long-term 5, 10 years, whatever, I think it makes the most sense. But I think what scares people and they don't understand, they're like, oh, it's too expensive now. I can't buy it. I think that it's breaking that mentality down. Like, no, you don't have to buy one at one time. You can DSA in, you could buy sats, you can stack sats, you don't have to buy one. I think they failed to see the bigger picture. And when Bitcoin's sitting at a couple $1 million one day, which I think it definitely will, they're going to be like, oh, wow, 60,000 was cheap. Should have got it then. Like whenever I thought, oh my God, 3,000, that's kind of a lot. 16,000, no, that's too much. You know what I mean? So I think it's going to be one of those things.
Absolutely. Well, and that goes back to what is the value proposition of money? Because ultimately, I said this is at commodity value right now. It's heading towards monetary value. What is monetary value? Monetary value is global GDP. Monetary value is the wealth of the entire economy of the world divided by 21 million. So that's the price that we're going to in the long run. And you can leverage that knowledge now, understanding that it will get there not in a straight line, but cyclically through the natural evolution of the free market price discovery process. And if you play it right, it can be life-changing. I remember when I first bought Bitcoin, it was like $160. And I said, dang, this is expensive. This is some magic internet money for $160 a coin. That's some bullshit. Well, look at it now, right? So it's the same thing. 10 years later from now, we'll be at $6 million. And people who bought it 60 will be like, well, yeah, I thought it was expensive back then, but I was getting the deal of a lifetime. And that's where we are in Bitcoin. And I don't think any other project is going to be able to have compounding annual growth rates like Bitcoin does. The compounding annual growth rate of Bitcoin actually ties into the product I'm building at People's Reserve, the principal protected capital note I talk a little bit about at the Energy Summit.
Tell us about this. Yeah. Tell us about People's Reserve.
So look, what's even more important is, since we just came off the Fed has a problem, right? They can't raise interest rates. They can't lower interest rates. What are they supposed to do? Well, here comes that famous saying, Bitcoin fixes this, right? Well, how does Bitcoin fix this? Because it's the most pristine form of money in the world and the most pristine form of collateral in the world. Why? Because there's 21 million units. There'll never be any more. And because of the inflation schedule, it's harder than gold. It's harder to earn a Bitcoin than it is to pull gold out of the ground and supply it to the marketplace. So no matter how much people want more of it, the only way to get more of it is to pay a higher price. That creates a price dynamic in Bitcoin, and in all of finance. Price discovery works the same way. Bitcoin's not special. But what happens is when you get a stock like Apple or Microsoft, you get what's called a compounding annual growth rate. And the compounding annual growth rate of Bitcoin is 60% over the last 10 years. That blows away everything else. Nothing else even comes close. So what you can start to say is, well, wait a second. What if we vertically integrate Bitcoin into treasury bills? What would that do? And what you would do is you would sell a principal protected capital note. And you would, let's say you raise like $100 million in this note. Well, you would take like $80 million of the note and you would buy US Treasury bills. And these US Treasury bills are paying 5% right now. So when you keep rolling that over and over, at the end of the 5-year note term, you're going to end up with $100 million. So if Bitcoin goes to zero, you don't care. You have the $100 million you invested. Sure, in real terms, you didn't gain anything because you only have the same nominal value that you invested, but you didn't lose anything. Okay, now let's say Bitcoin doesn't go to zero, which it's not going to. So when it doesn't go to zero, the performance of Bitcoin becomes the yield of the note. So if the performance of Bitcoin is 60% compounding annual growth rate, or what they call CAGR, if you cut that in half to 30% CAGR, and then you cut that in half again to 15% CAGR, well, the risk-free rate of return today is a US Treasury bill at 5%. If Bitcoin doesn't perform that well, we can create a debt note that performs at 15%, 300% more than the US Treasury bill with principal protection. So when you start taking Bitcoin and integrating it, and this is on a private level, the US government can do this. Matter of fact, Biden or Trump, hit me up. Let's go. Get a real
Biden
economy
does
guy in
not
there.
know what you just said.
Yeah. Get a real economist in there and start to innovate, because we're at the point now where we're either going to be moving into hyperinflation because people are losing trust in the system, because that's the difference between inflation and hyperinflation, the loss of trust. There's no mathematical point. I've studied hundreds of fiat currencies that have all failed. The economics textbooks will tell you, oh, once you get to 50% inflation, that's they try to mathematically define hyperinflation. But there is only one way to define the transition from inflation to hyperinflation. And now all your listeners will be able to watch and see this with their own eyes as it happens right here in the United States. It's a loss of trust. When people no longer trust the US government to control the budget, when they start to realize that they can't control the elements of inflation, which the Federal Reserve admitted by targeting inflation, right? It's not like they're like, oh, inflation's some bad enemy. They want 2% inflation per year as their target, right? So it's like part of the system. But when they start to realize there's nothing that they can do, if they issued a principal protected capital note backed by Bitcoin, the more money you print, the higher the Bitcoin price goes. The higher the Bitcoin price goes, the more your treasury notes produce higher yield. And now this goes back to our supply demand. The higher the yield, the more demand for the note. So you could sell as much currency derivatives backed by the US government you want if you just back it with Bitcoin and vertically integrate Bitcoin into the actual debt note. And at People's Reserve, we're doing that on a private level with the goal and plan eventually to offer it with states on a municipal level, and hopefully even the federal government on a national level.
So I think that, okay, two things. I have a question from someone that directly ties into that. But two, it's funny that you mentioned this, and this is how you can tell that people, in the office have absolutely no idea anything about Bitcoin. They're literally saying, and you have Elizabeth Warren, that little peach that she is, that she's actually blaming the devaluation of our currency on Bitcoin, not on everything that they've been doing wrong, right? No, they're actually blaming it on Bitcoin, and literally everything you just said completely counters that.
Yeah. Oh yeah. Well, I mean, I think if she did an interview, she would be just like that chief economist. She would just not know. She's bought and paid for. It's that simple. Most of the politicians are bought and paid for. I could probably count on my 10 fingers those who are actually true statesmen who want the best for we the people. That's, I personally believe, we were a republic, and then we devolved into a democracy, and then we devolved even further into a kleptocracy. And I think right now we're in a kleptocracy, which is basically where people who get elected fight over the money, fight over the purse, the power of the purse. And that's what we have right now. People fighting over the power. People, they don't even read these bills, Jenna. They're hundreds and they're sometimes even thousands of pages long. They get introduced and then like a day later they get voted on. No human being could read and comprehend that fast. It's it's like physically impossible. Like it's mathematically and physically impossible for a human to read and comprehend the bill, and it still gets passed through. And then within that bill is all this. So you have all these guys shaking hands. Well, if you get money, I get money. If you get money, I get money. Okay, well then you know what? Let's all go to the piggy bank at the same time and stick our hands in and pull out that money and give it to who's giving us money. That's a kleptocracy. That's where we are right now. And that's why people are losing trust, because it's become so obvious that this is how it works. And the people in charge don't understand the consequences of raiding the piggy bank and stealing the time and energy of the people. Eventually, so much time and energy will be extracted from we the people that we the people will stand up and say, we no longer trust you with the responsibility to manage the money, the tool that we use to exchange our time and energy. That will be the day that we transition from inflation to hyperinflation. And it doesn't matter what they do after that, nothing will stop it.
We, the people, should demand that all of the government spending be on chain. Can you imagine how much less waste there would be if all government spending had to be on chain?
We'd
Can
have
you
to build some
imagine?
more prisons if that was the case. I'll tell you that much.
Oh, yeah, we definitely would. We definitely would. Okay, so I just want to pull this up because I believe this ties into we the people. Where do we go to borrow our Bitcoin? Hi, by the way, Crypto Billy, absolutely love him. He is just awesome. Is there a bank that loans out 60% on Bitcoin, or are you talking a protocol?
Yeah, so right now you can go over to Unchained and borrow against Bitcoin. There's a couple of different models that they have. Of course, I think if you want to shake somebody's hand and you need help in understanding the process, you want to go to a centralized company and meet their reps and shake a hand and get educated on the tool that you're using. But if you already understand these things, you go right to DeFi. You go right to MakerDAO. You go right to Aave. You go right to the market makers yourself, and you interact with DeFi to borrow against your Bitcoin. Now, the risk when you borrow against your Bitcoin is if the price goes down, then you can get liquidated, right? So let's just say, for the sake of math, the price of Bitcoin is 100,000, and typically you're going to be able to borrow like anywhere from 40 to 60, sometimes even 70,000 against that. But the more you borrow against it, the more risky it is, because the less of a price movement can get you liquidated. Because
Sure.
from the lender's side of things, and this is what makes DeFi so interesting to people like Larry Fink, one of the biggest market makers in the world. In DeFi, with Bitcoin loans, we're talking about over collateralized loans. There's no default risk. If I borrow money from you and walk away and never see me again, it doesn't matter. You'll just sell my Bitcoin, take your principal plus interest back. And then when I come back, if I ever come back, my Bitcoin will be waiting for me in my account. There is no risk to the lender in decentralized finance. It's an over collateralized loan. The risk is really on the borrower to know what they're doing. So these are sophisticated tools that can end up in you losing everything you borrow against. So please make sure you understand them before you use them.
Yeah.
But once you understand them and understand how to use them, they can be so empowering that the traditional system has nothing that it can offer that stands up to what we see in DeFi. And I believe in the future, not everybody is going to want a 0 and a 1. You know, DeFi are zeros and ones. Imagine you're a farmer and you got your crop. You know, would you want to work with a decentralized contract when the price of Bitcoin goes 1 cent below your liquidation price? That 0 turns to a 1 and everything you worked for disappears. Or would you want to be at a centralized lender like People's Reserve, where you can come in and shake our hand, look us in the eye, and say, hey, look, I can't post more margin right now, but I have contracts for my crops. And when my crops sell in 2 months, not only will I be able to post margin, but I'll be able to add an increase to put a little bit more of a buffer there to maintain my treasury. And you can shake a hand and you can come to a conclusion. You can find a way to resolve without losing everything you have because a 0 changed to a 1. So I think there's places for both. There's
Wow.
some times where the more efficient and cheaper 0 and 1 will work best for you. And there's other times where a handshake and an understanding and a method of recourse will work better for you. But both of those solutions, the money market is a multi-$100 trillion market. Look at all the central banks in the world. No one bank can handle this market. So companies should focus on what they know and do best and provide value for their customers. Stop extracting value from people and start delivering value, and your community will explode.
That's something you don't hear about anymore, the handshake. You know what I mean? And just believing that people are still people. So
Yeah.
I love that. Um, Someone put this on and it's a little slightly off topic. Oh, here, I want to bring this up. Just guys, if you have questions, I know we're getting close to an hour, but definitely drop them. We'll do what we can. I know CJ's time's limited, and thank you so much for all of the knowledge that you're spitting. Everyone's just loving it. We're getting so much awesome feedback. Thank you so much, guys. Smash that like button. Mark says, CJ, do you see a future for Litecoin?
You know, I one of the few times I made a trade in the past year or so was going into the Litecoin halving, because I did pretty good on the previous Litecoin halving, and I was let down going into this halving. So I don't really see much of a future for it. Maybe just as like a test net for Bitcoin. I don't think I see it being the silver to the gold. I don't think we have that barter ability versus store of value. Like Bitcoin, like I was saying earlier, Bitcoin is store of value focused right now. And once it goes from commodity value to monetary value, and then it makes sense for people to actually spend it, I think, the L2 solutions will make it a medium of exchange. So I don't see Litecoin playing a big role in the future of money.
Okay. All right. I like that take on it. Okay. So before we wrap it up, there is a video. We talked a little bit about ETFs, and, I'm about to be like, you're like Sailor Junior up here, but not really, because you're way cooler, by the way, CJ. But let's just pull this up because it is kind of interesting. I want to get your take on this. Oh, hang on. Sorry. I thought I was sharing it. I'm totally not sharing it. Guys, I've streamed a million times and I still screw up. It happens. All right. Let me do the right thing now. We can hear them, but we can't see them. All right. Share. And let me pull them up here. Share. All right. Let me rewind this and bring it up. All right. Can you see it?
Yes.
Ethereum is not going to be approved. Sometime this summer, it'll be very clear to everyone that Ethereum is deemed a crypto asset security, not a commodity. After that, you're going to see that Ethereum, BNB, Solana, Ripple, Cardano, everything down the stack is just a crypto asset security unregistered. None of them will ever be wrapped by a spot ETF. None of them will be accepted by Wall Street. None of them will be accepted by mainstream institutional investors as crypto assets. This is the one universal consensus accepted institutional grade crypto asset in the world. There won't be
Okay. So you get the idea. What are your thoughts on this? I mean, is he right, or is he just a maxi trying to protect his investment?
Well, first off, I love Michael Saylor. He puts so much time and energy into Bitcoin when he doesn't need to.
Yeah.
And I think it's because he really wants to see people succeed and to understand the issues that are at hand. But I at the same time, he said institutional crypto asset, and I think he just identified the emerging asset class. So Bitcoin is money. He's right. Bitcoin is different. Nothing else can be what Bitcoin is. So I do agree with that point, and I think it's astutely made. But when he said that it's an institutional crypto asset, that's what I think Ethereum is. That's what I think Avalanche is. That's what I think Stacks is. I think there's going to be tools that help evolve Bitcoin from digital gold to digital collateral, right? Like Bitcoin is that, it's like the perfect wheel. But if you just have a wheel, that's cool, but it doesn't really help you do anything. You need to attach a cart to the wheel so that you can start to do work, so you can start to be productive. So yeah, Bitcoin is the wheel. There cannot be any other wheel. There's no need to reinvent the wheel. We have the perfect wheel, but we need institutional crypto assets that turn that wheel into a cart so that we can be productive, that turn that digital gold into digital collateral so that we can have a multi-hundred trillion dollar money market that has free interest rates, not rates stated by a group of men, that has free market price discovery, not price discovery that closes down at 4 o'clock. And for that reason, I do agree that, yes, Bitcoin is different and nothing can compete with it. But also, I think he actually just named the institutional crypto asset class and just has inappropriately identified it as Bitcoin. Bitcoin is so beyond an institutional crypto asset. It's the first discovery of money. It's the first discovery of real money for humanity. It's going to bring us to a level that nobody can even imagine. But institutional crypto assets are going to help it transform from just being that digital gold to what brings us to the next level, to what gets us out of the hole that was created by this modern monetary theory of all these central bankers printing money with no consequences. Bitcoin saves us from the consequences of these bad decisions, and institutional crypto assets will help in that process.
Awesome. Guys, on that note, we are going to close out. CJ, thank you so much. You have just been an amazing guest. I know everybody in the stream just absolutely loved it. So thank you so much. And guys, smash that like, follow CJ on X at CJ Constantinos, and have a good, happy Friday night, guys. Appreciate you for showing the love. Peace out.